time for today's three-stock lunch, and here with our trades is Malcolm Ethridge, CIC Wealth Management Executive Vice President and a CNBC contributor. First up, Malcolm, welcome. And first up, Visa. Visa and MasterCard settling now a long-running lawsuit agreeing to a $30 billion settlement that is going to lower those so-called swipe fees. Shares of Visa are higher today, presumably in part because by a little bit. What's your trade on Visa, Malcolm?
Yeah, Tyler, I actually think this one is a buy, despite what you just mentioned with some of those swipe fees potentially coming down. I think Visa will figure out a way to make up the difference. There's concerns about cybersecurity. They'll always be able to offer extra protections there. So to me, Visa is the definition of a defensive stock, right? Good economy, bad economy, recession. It doesn't really matter because they sit in the middle of each one of those transactions that you and I make and collect their fees. So I think this is a great one to hold long term. And I also think it's one of the better fintechs to own, probably even safer than one of the big banks because it doesn't have that interest rate sensitivity that a lot of the financials do.
And next up, Malcolm McCormick, the spice maker benefiting as more consumers eat at home. McCormick reporting net income climbed 19% year over year, shares up nearly 10% today. Malcolm, what's your take on this one?
Yeah, so I actually like McCormick. This one has basically been beat up for about 2 years, right? They hit their all-time high in March of 2022, and they got cut in half pretty much since then. But I think McCormick is one that we should at least consider because as the markets start to get a little wobbly, we've got an election coming up. We know volatility happens in election years, and investors go seeking security. The staples will be the name, the sector, that investors look for. And McCormick is a great one in that space that doesn't have too much trouble competing with the names like Walmart and Target that have offered their private label since the COVID pandemic caused people to go down market a little bit.
And finally, we're going to look at CVS. Amazon announcing same-day delivery of medications in New York City and Los Angeles. Plans to expand the option to other cities by year-end. It could be a threat to traditional pharmacies, including CVS. Your trade on CVS.
Yeah, so for me, CVS is a sell, partly for the reasons you just mentioned, right? But also I've heard investors make the argument that some of the acquisitions CVS has made most recently, specifically Aetna, I think is the biggest, more marquee one, should put in the bottom here in the mid-70s somewhere for CVS. But I just feel like the market for PBMs, those margins are shrinking and shrinking. And so the online pharmacies that compete against CVS have just been cutting into those margins. And then you also have to couple the fact that CVS has a shrink problem, right? They still have stores being closed due to theft. And I just don't see this turning around anytime soon. It's going to be a long, hard slog for those shares.
All right, Malcolm, thank you very much. Appreciate it. Malcolm Ethridge.